Welcome to the Money Mentors Podcast.
This Money Mentors podcast is about helping you with your retirement questions. So if you have a question for us, reach out online anytime at matsonfinancial.com. We tend to talk more politics in an election year, right? So
Yeah.
a lot of discussion, though, lately about who's going to lead the country over the next 4 years. Now, there's a lot on the line tax-wise as well. And I thought USA Today actually did a good job recently of breaking down what happens, good and bad, when the Trump tax cuts expire come 2026. Because a lot of people are expecting, no matter who wins in November, Trump or Harris, something's got to give tax-wise. So what do you think we need to know about potential changes just 2 years from now when those tax cuts expire?
I think in reading through everything, the biggest things that really brings it home, I think for listeners especially, is, you file your taxes from year to year. Depending on how close attention you pay to it, you would have obviously seen that benefit, or maybe you didn't really feel it because you weren't really paying much attention to it. But it really does just lie in the numbers here. So for a married couple whose total income after deductions is $250,000 in 2017 would have been at a federal tax rate of 33%.
Okay.
Currently in the 24% tax bracket.
Big difference.
Right? So that's a big difference. Yeah. Obviously not everybody's making $250,000. I understand that, but it does show that. So if you're an individual and you're making $39,000 in taxable income, in 2017, you would have been the top tax rate for you at 25% compared to 12% in 2024. So you would cut your tax bill in half, essentially.
Wow. It means it's going back up if nothing happens, too.
Right. And it's so hard to sort through the mess in the news, all the banter from both sides. And the Trump tax bill only affects the ultra rich and not the, more middle class earners. And that's not necessarily the case. We work with a lot of people who earn a really good living, but not $250,000, and have stayed really dedicated to how they save and get to retirement and live a very responsible lifestyle. This current tax structure has been so good to them. It's been pretty amazing when we work with it every single day.
And I will say, too, one thing to look at, I know that was a huge shift with a lot of people, was itemizing. It was like once that really went away, once this tax plan came into effect, people were still like, well, I think I should still itemize. And they had to get used to what that looked like. Because, right, it's so hard to, like Taylor said, there's a list of items that really change and what that would look like and how that affects you. But until you go through it, you don't really know. And obviously you have to work with an expert. But you could get used to itemizing again in this case. So the standard deduction basically doubled under Trump's tax cuts, allowing many more to use it rather than to itemize. It's just easier, right? You don't have to itemize everything. You don't have to keep track of everything. So there's some of that simplicity of letting go of that stress. But if this provision expires, the standard deduction will drop. Personal exemptions will resurface. And then more people, you'll get to itemize your taxes again. And I don't know if that's better for you or not. But once again, like we talked about, what is that kind of opportunity cost of keeping track of everything, itemizing, and getting those deductions rather than, hey, I don't have to do that legwork because the standard deduction doubled. So it's that trade-off. But I think it's nice to have something that's simpler because everything else in life seems to get more complicated.
Well, and the standard deduction, being what it is, most people would never itemize the amounts that they get in that standard deduction today. If you're doing more than that, you can still itemize those deductions, right? It's not like it went away, but for your average everyday American, that deduction went up way, way higher. Another one is the child tax credit will shrink. And then a good one would be those people that are working from home. There's going to be some more benefits to what they can write off there for them. Mileage, home office supplies, internet bills, things like that.
That's good in the way that, hey, it can ensnare more people, but at the same time, now it's becoming something that you have to itemize or keep track of.
Right.
And so it's kind of a pain point too. And so I think the biggest takeaway with all of this is if at the end of these next 2 years, nothing happens, depending on who gets in, the tax rates are going to change and they're going to increase. If nothing happens and nobody votes on it, they're going to go back to what they were. And that is an increase of what that looks like for you of going into perhaps a higher tax rate. And that's not fun. So that's why we're really looking at it right now over these next 2 years to say, we don't know what's going to happen. We're not going to guess. But we're going to look at the math. And we know that over the next 2 years, there's still a lot of work to be done. We can look at your taxes and get ahead of this to prepare for what happens when I am in my 70s and I have required minimum distributions. happens? Am I going to be put into a tax bomb situation and kind of locked in there? Or can we start working on that now? And it's not a set it and forget it when it comes to tax planning. We revisit this every year because your life changes, your income changes, how taxes affect Medicare and your health insurance premiums and everything from there, and your Social Security. So all these things, really, it's like playing a chess game, but that's why we work, with fiduciary advisors here who are in tune with your tax plan. But also we have Matt, who's our licensed agent that focuses on marketplace and Medicare insurance on the health side. So you truly have a health and wealth plan with people communicating together. You're not the one that's communicating on behalf of all these people.
Yeah, I know we just kind of went on for a long time there about taxes. And I don't think we actually said the word taxes as much as I normally do. But at the end of the day, the next 2 years, as far as tax rates go, are going to be more beneficial than what they will likely be, high likely what they will be moving forward. So don't be complacent. Take advantage of it. Work with an advisor. If you already have an advisor, make sure you're getting that advice. If you don't, obviously give our office a call and we will come up with that tax plan and see, how we can help you when it comes to reducing that tax bill today, but also in the future, because the next 2 years are going to be really big for that.
Really key. Yeah, because again, we've been talking about it here on the show. Laurel and I were talking earlier. We've been with Money Mentors now for 10 years, but for 7 of that now, we've been talking about these tax cuts, what a difference it can make year over year. And Taylor, Laurel, you've been strategizing with your clients for these last several years. What difference do you think that's going to make for them, people who started earlier versus waiting until the last minute here, maybe next tax year to start on some of these strategic moves? I would imagine you've probably saved people a lot of money that they're going to keep for themselves.
Yeah, for some tens of thousands, for others hundreds of thousands. And that benefit at this point in time is still unmeasurable, right? Because we're talking tax-free growth forever.
Nice.
So who knows? It could be way, way more than that, but we know right now that we've already recouped what we've paid in that tax by way of growth in portfolio management, also mitigating those taxes down the road and also mitigating things like the cost of your healthcare or your Medicare when you attain the age of 65. So it's a big deal.
And we've heard from people over the years, they'll say, I wish I would have called sooner, or I wish I would have talked about my tax strategy pre-retirement, because we still do, yes, we're focused on retirement, but we still have a lot of clients who haven't quite hit retirement yet. They're 18 months out, maybe even 3 years out. But this is the time to really strategize and look at what that is. Even if you're in your high income years, there might be some things that we can do. If you're not in your highest income years and you're just that, hey, everyday average American, and that's great, but hey, you can get started on it now, right? You don't have to wait until I'm ready to retire and now I start doing things and you wish you would have known.
It could be as simple as switching from pre-tax to Roth 401k contributions, and I wouldn't say it's a blanket statement, everybody go do that. Obviously, you want to consult your tax preparer and say, well, if I do switch it, that additional income added to my W-2, is that going to bump me up a tax bracket, in which case we wouldn't want to do all of it. But if you're pretty solidly in the 12% tax bracket, 22% tax bracket, it's a great time to take advantage of it.
Want weekly lessons from your money mentors? Yes. Hit the subscribe button now and listen every weekend on Wood Radio.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Fee-based financial planning and investment services are offered by Matson Financial Services, LLC, an SEC-registered investment advisor. Insurance products and services offered through Lakeview Financial Group, LLC, Matson Financial Services, LLC, and Lakeview Financial Group are affiliated. To find out if Matson Financial Services is licensed in your state, please call 800-536-8907.